Hello and welcome. Today we're working on a simple balance sheet just to explain how a balance sheet works, how to look at a balance sheet, and how to understand it. Now, remember the accounting equation is assets equal liabilities plus equity. We call this the accounting equation, and this is always going to be true, and also this is the secret to the balance sheet. All right, so what does a balance sheet look like? Its assets have to equal liabilities plus equity. So if you want to think of it this way, you can show a balance sheet either kind of left and right, or you can do it top and bottom. Because I'm showing this on a video and showing this on Excel, I want to do it where you can see everything at once. I'm doing left and right, but a lot of times you'll see the liabilities, scroll down, liabilities and equity, and you'll see that all together. All right, so the way that it works is we're working on this Travis T-shirts company, and we'll say it's the balance sheet, and we'll say it's for December 31st and a certain date. It's always going to be a date. The income statement's for a range, a period, and for a range of dates for the year ended or whatever. So this is on December 31st, what are the balances of the accounts. So we're going to list all our assets. We have cash, we have inventory, we have office equipment, cash, accounts receivable, inventory, sorry. I can abbreviate accounts receivable AR, and then inventory, and then office equipment. All right, we know what cash is. Cash is anytime we have a bank account, a checking account, actual currency, that would all be cash. Accounts receivable is the right to receive cash, so that's an asset that's valuable. That's $600. Our inventory that we're ready to sell is $1230. And our office equipment is $1,800. That could be something like a desk, or could be computer or something like that. All right, so our total assets, if we add this up, the sum of all these numbers, and that's $7,030. So our business, Travis T-shirts, has total assets of $7,030. Now we know our liabilities and equity have to equal that. All right? So what liabilities do we have? We have two: accounts payable and notes payable. So I'm going to type this out: accounts payable and notes payable. So what is our accounts payable? Our accounts payable is $1,400. Our notes payable is $1,500. Okay, we owe, maybe we purchase shirts and we owe the supplier still. They gave us 30 days to pay. And then here we may have just borrowed money from the bank and signed a note, $1,500. We may have borrowed it from a family member and signed a note and pay interest. Okay, that'd be perfectly acceptable. So we have total liabilities, and our total liabilities are going to be the $1,400 plus the $1,500. So that means our business has total debt of $2,900. Okay. Now we have two equity accounts. We have common stock. And so what we have here is we probably had the owner, I guess his name's Travis, has put in $2,800 of assets, could be cash or whatever, and received common stock. So he set up a company and has issued common stock. The company has to him. Now we also have retained earnings. Now, this is not correct to put in the 500. Remember, we just calculated retained earnings in the previous video. We know what that is, but let me show you how this would work. If we add up the common stock plus the retained earnings, then this would be our total equity, and then our total liabilities and equity would be the $2,900 plus the $3,300, and we have $6,200. Now we know it doesn't equal, so we know we've made a mistake. Now what mistake did we make? Well, we don't want beginning retained earnings, we want the ending retained earnings. In our previous video we did ending retained earnings and we got $1,330. So let's put $1,330 in for the ending retained earnings. And everything updates, and we have the total liabilities and equity is $7,030, the total assets $7,030. So our balance sheet balances. So the big categories on the balance sheet are assets, are what we own, liabilities are what debts we have, and then equity, how much does the owner have claim to. So the owner, Travis, has equity of $4,130. If he closed this business down and paid off all the debts and got cash for everything, then he would have equity of $4,130. That's how you look at a balance sheet. That's how you look at all the financial statements. So you have a good understanding of how financial statements work and how to understand them, how to start to prepare those. See you in the next video.